Yeah, everyone, welcome back. Today we're looking at Rivian. CEO has sold a significant 820,000 worth of stake in the EV company. Wow. Wow. This is big and we have to talk about it. I was quite captivated when I heard about this news and I had to write about it. According to regulatory filings, Rivian founder RJ Scaringe sold 71,429 Rivian shares on June the 10th for a market value of $820,883.50. The stock saw a 3% increase to $11.87 on the day and has risen by 10.5% so far this month. This is as of June the 12th, of course. In late May, Morgan Stanley prominent autos analyst Adam Jonas met with Rivian's management. Based on the meeting, the analysts believe that Rivian has a distinctive advantage in the auto industry besides Tesla when it comes to expanding a fully integrated software stack necessary for tapping into AI opportunities. So on the same day, the CEO of Rivian also purchased the same amount of shares, 71,429 shares of Rivian Class A common stock for $2.62. Now, how the hell is this possible? This cost them roughly $187,729. The acquisition was made outside of the trading plan and utilized a vested stock option as of February 14, 2023. That's a stock option, something similar to what Elon Musk has been offered and is going through right now. Sometimes CEOs can get stock options, which means that they can, in the future, buy stocks at a reduced price, at an agreed reduced price. So what Arjus Karin just did was very, very clever, and it's not uncommon. It's very common practice. Although it might sound really strange, it's a very common practice. It happens all the time, you know. What RJ just did is essentially he retained the same amount of shares he has in the company, but he just made a boatload of money by using stock options to execute this. So after these transactions, RJ Scaringe, direct holding in Rivian Automotive, dropped to 909,691 shares of common A class stock, showing a strong commitment to the company's growth. Furthermore, the CEO also had an indirect stake through a trust and an LLC, which includes a significant portion of shares, underscoring his dedication to the success of the electric vehicle maker. So, can I just explain this in a bit more understanding way? So, what we have here is a Form 4, SEC filing, Form 4, United States Security and Exchange Commission, Statement of Change and Beneficial Ownership. So, we have the Class A common stocks, and it looks like we're going to focus on these two top trades right here, same day, but the codes are different. One says M, one says S. And right here, you have a trust with some ownership of shares, and you also have a LLC with about 4,595 shares. The trust has over 2.6 million shares in that trust. So that's pretty good. But essentially, what he did was he sold a large position of 71,429 shares at $11.49. He then bought back shares using the stock options that were available to him. And because the agreed up price was already agreed upon, the price was $2.62. Now something like this has to be agreed upon through the board, through the stakeholders. So it's not like he's doing anything illegal. This is completely within his rights to execute his stock options. It's very common for CEOs to get stock options. Like I said, Elon Musk has had stock options before, and his most recent stock options are perhaps the most controversial. I believe around 55 billion US dollars it's worth. So that's like a deal Elon had. So that's like a deal Elon had with the Tesla board members and the stakeholders. But right now, as you can see, there's some difficulties for Elon to obtain those stocks as agreed upon. So the legalities of that could get quite a bit messy because it's 55 or more billion dollars. It's crazy. And when you really think about it, you got to think they really didn't think the Tesla company would do so well under the leadership of Elon Musk. That's why they probably agreed to such a ridiculous amount of money to give Elon if it did achieve what it does. And Tesla has achieved great things in the past 5, 10 years. They've accomplished great things. So I'll always say if it was agreed upon, yes, give the man his money or his stock options. If it was agreed upon, absolutely. But sticking on the Rivian topic, in other news, Rivian. What we know recently is some fantastic news. Rivian has recently announced a revamp of its pickup trucks and SUV lineups. The second generation R1S SUV and will start at $75,900, an increase of $1,000 from previous models. The tri-motor option will have a starting price of around $106,000. The R1T pickup truck will maintain its starting price at $69,900, while the tri-motor version will cost approximately $100,000. However, specific details on range and pricing for each trim levels have not been disclosed yet. According to the company's statement on Thursday, more than half of the vehicle's hardware components have been changed and their batteries have been re-engineered. And here's a quote from RJ Scarin, the CEO. And I quote, "We maintain commitment to providing top quality and high performance vehicles. Our revamp R1S and R1T pushes the boundaries even further, making them our most capable products to date." These updates also come with equipped new zonal electrical architecture and an in-house developed drive system. Additionally, Rivian reported encouraging progress in its recent earning calls, surpassing its delivery expectations and reaching a production mileage of 100,000 vehicles. Rivian recently reported a worse than expected loss for the first quarter, totaling $39,784 dollars per vehicle delivered. That's a lot. 38,000? Almost 39,000 per vehicle delivered. That's a loss. There have been speculations that EV startup Rivian may be partnering with Apple. Despite these challenges, Rivian maintained focus on improving demand generation, cost efficiency, and plant operations as they work towards profitability. In their first quarter earnings report on May the 7th, Rivian shared that the revenues have increased by over 80% to $1.2 billion, while also reporting a loss of $1.2 per share compared to a loss of $1.25 in the same quarter last year. Wow, that's almost virtually the same if I'm being completely honest. So analysts have predicted a loss of $1.15 per share, with sales totaling $1.17 billion for Q1, ending the quarter with $7.8 billion in cash and cash equivalent and short-term investments. Rivian expects to see significant improvements in material and conversion costs as they continue to develop their R2 model, with an anticipated modest gross profit by the end of the year. According to CEO Scarinch, first quarter results exceeded our expectations and have set a strong foundation for the rest of the year. So like I've said before, this is very much very promising for Rivian for many reasons. Something else I want to touch on is these new models, the R1 second generation models. It's quite impressive. I've long awaited for Rivian to do something like this. It's innovating, and I've said it before, Rivian is more than just a car company. They are ultimately a tech company, especially now they're proving it with their new latest autonomous driving software. This is Rivian Autonomy Platform Plus, and this is just a visual representation of what that would look like. This is what the company is starting with, and I absolutely love what I'm seeing. And like I said, this kind of thing will only get better time over time. It will only get better. They're probably starting with more basic autonomous driving like highway, autopilot, lane assist, stuff like that. Probably lane change as well. And they'll slowly graduate into higher and higher areas of autonomy, which is ideal. But this is one of the best steps for Rivian to go into is autonomy, because this will be their IP, intellectual property. This is theirs. No one else's, theirs. And when you build a company on your own intellectual property, it gives you fundamentally significantly more value than you could ever anticipated. Tesla probably has one of the best autonomous driving software, if not the best autonomous software driving in the world, if not outside of China, because China has their own systems based on so many other different companies, and they look very impressive as well. So don't underestimate China. But outside of that, Tesla is definitely leading the way in autonomous driving. And the value of that software that they've built for so many years is indescribable. It's hard to describe just how valuable that software is. FSD is truly beyond our expectations in terms of value. But also, Tesla's developing robotaxi. They're also developing a robot itself, and it's becoming an autonomy company. It's becoming a tech company, and Tesla has long made it clear that they're a technology company that happen to build cars. They're a technology company on wheels. The product itself, it's technology, but it just has wheels. And a lot of EV companies, this is what they're slowly becoming. And Rivian is showing that they can follow this suit. They see the value in what Tesla is doing, and they understand that it's very valuable, not just for Tesla, but also for themselves, because this is a software that is of your own. You could license it if you want. You don't have to. You don't, but it gives you so much more benefits. It's an asset class, it's an asset line. It gives you a wide varieties of options. And this is the amazing thing of, autonomy. And Rivian right here is just showing off what it would look like with their radar, what it would look like with their cameras. That's incredible. Cameras expanding 50 feet. But then you have the ultrasonics. Wow. And cameras extending over 500 feet. And then you have 1,000 feet plus. And this is for additional ultrasonic cameras. My goodness. My goodness. I can't wait. So that's what I mean when I say this. That's a tech company. Car companies never used to do this. That is a tech company. And companies like Rivian, companies like Tesla, they're very much in favor of building their own software. They're very much in favor. This is why Rivian has no Apple CarPlay. They don't have Android Automotive. They've built their own software. They've built their own OS, their own operating system. You've built your own computer in your car. You are a tech company. So if I say Rivian is a tech company and you disagree, explain to me how they're able to build a computer in their car. That's a tech company. It's a computer. And a company that builds computers is a tech company. So, believe it or not, a lot of these EV companies, they're becoming tech companies regardless if they like it or not, because that's what the future is. If you're looking at everything, that's what the future holds. I must say, I really like the art style that Rivian is going for in a lot of these really nice, neat animation. I really like the art style that they're going for. I really like the vibe. They're thinking the way I would think if I was running Rivian. That's what I've always said, and that's why I appreciate the introduction of autonomy into the Rivian vehicles, especially with Rivian optimizing for efficiency. The new generation, second generation R1 vehicles, it's all about optimizing for efficiency. So when the new R2 vehicles come, understand something. They'll be starting a step ahead. A step ahead. They want to optimize even more for efficiency with the R2 vehicles. Because as you can tell, this company cannot continue making a loss of 38,000 or 39,000 per vehicle. That's not sustainable. And this is why it's so crucial for Rivian to build factories and to get the R2 vehicles out on the road as soon as possible, because those vehicles will do the best because they're more affordable. They're also large vehicles like SUV, mid-size SUV, large SUVs. They will do incredibly well in today's market. I think the one thing that holds Rivian back right now is the lack of infrastructure, but they're slowly building that out. Remember now, Rivian is a company that have their own charging infrastructure, the Rivian Adventure. That is something that Tesla was building in their early days that people didn't originally understand or believe, but now everyone is adapting the Tesla charging station system. But also just Tesla building their own superchargers, that gave them an asset line. It's an IP, it's an intellectual property that's owned by Tesla. Even now Tesla can allow other companies to use the superchargers, but it's still Tesla. When you go there in your Polestar or your Porsche, you're gonna look across and you're gonna see a Tesla logo. You're gonna look across and you're gonna see a Tesla logo, and then you're gonna see those really nice Teslas driving through. And you're gonna be like, "Oh, I'm the only one here with a Porsche. Oh, I'm the only one here with a Polestar. I'm the only one here with a Rivian." Oh boy, do you see? Do you see what it's done? It's like the blue bubble, green bubble thing about Apple iPhones in the US. There's this whole debate about green bubbles and blue bubbles. I don't get it because I live in Europe, so I really don't understand. But this will be similar to that because it's like, why are you the only one here with a non-Tesla vehicle? What are you doing here? It might not be that bad, but we never know. People can be surprising. But I really love what Rivian is doing, and their recent announcement. Just look at the interior of these things. I really like the wood finishing. I really like the interior touch-ups, the interior improvements that they've made, the exterior, the chassis improvements, the platform improvements, the entire improvements to these vehicles. I really love it, and it's promising. And it's exactly what I've been waiting on to look and see. Is Rivian actually thinking how I'm thinking? Are they looking to optimize for efficiency? Yes, that's confirmed. Are they looking to build software, more software, not just their OS, but more software like autonomy software? Yes, that's been confirmed. Are they looking to establish more vehicles at a more cost-efficient strategy of manufacturing? Yes, that's been confirmed. Are they looking to establish new factories? Yes, that's been confirmed. Are they looking to expand into Europe and Asia? Yes, that's been confirmed. I don't think there's anything that I can think of right now that Rivian is not doing that I want them to do. They're pretty much doing everything that I've wanted them to do. But it's taken me a long time for them to reveal this information to me. It's taken them at least 2-3 years. I've been waiting for a lot of these information. Like, Rivian, are you going to do what I'm thinking you're going to do? Please do it. It's confirmed. They're thinking how I want them to think. And it makes me way more confident in investing in this company. It's probably one of my favorite EV companies to invest in, apart from Polestar. It's probably one of my favorites. Thank you for watching, subscribe, and I will see you in our next video. Peace.